Hey guys, let me share with you some really good setups that I saw today. We're going to start with context or news, an orb trade that was really good, a double top that I saw later in the day, a double bottom where that took place, and some negative divergence that was taking place along with the double top. So let's get into all of those. We're going to start with the context, and that is that the CPI numbers that came out this morning at 8:30 that caused the futures to jump higher were cooler than expected. So we had a cooler inflation number. And the reason that's really important for today, especially, is that a lot of the inflation expectations were that inflation would be kind of running wild with the tariffs that are in place. And so when we had a cooler number than expected, it wasn't that it was only cooler than expected. It was cooler when I think a lot of people expected the number to be hotter. So it's kind of a double good for the market type number. The reason, obviously, that the inflation number is important, CPI was important this morning, is for the Fed cutting. If the Fed thinks that inflation is under control, it gives them more leeway to cut. So that was the mindset that I had going into the trading day, that I would have a bias to higher, that we would probably move higher. So let's go ahead and jump into the first thing was the orb trade. As I've talked about in another video, how to set this up step by step. Type in opening range. And I just use this GORB algo in TradingView. So now we have the opening range. This is yesterday. And I'm going to I've set up replay, and we're going to start with today and what that looked like. So we opened higher, obviously, like I was just saying around CPI. And this is the 2-minute chart. So we get to that 9:45 time frame. Let me blow this up so you guys can actually see it. And now we have our opening range set, right? The top of that range is 511. And there's another thing that was really important. Let me just bring up another chart real quick. I want to show you the Fibonacci lines that I have in the Qs on a daily chart. And the reason that that is important. I drew these lines these Fibonacci lines, literally over a month ago, right? So this was from the high just toward the end of February, from that high down to the low on April 7th. And this was the post-Liberation Day, post-tariff announcements. And this is when I drew those Fibonacci lines in. So look at this level. This top level is 511, right? And that's a retracement of 78% of this entire move. When you have a retracement of over 75%, you are very likely going to have a 100% retracement. I think the Qs are going back to the highs, which is basically just over 540, right, with the Qs. And I think that's, most likely where we're headed. What was important about this number this morning, this 511 number, right? This is a number that I have in my head because I know that's the 78% retracement level, is that if we break through that level, we're going back into this range. So we're moving from trading under this range, and there are a lot of ranges that set up over the past couple of months, but we're going back into a range that was in place from basically early December all the way up until that late February timeframe. So it was a very important resistance level, 511. Again, one of the reasons I was focused on it. And now you can see that 511 number, that again, 78% retracement on the Fibonacci levels, is literally the number that we have as our opening range break. right? So it's a not only an important orb number, an opening range break number, but it's a very important number on the Fibonacci retracement levels. I'm gonna go ahead and hit play, and you'll see what happened. Obviously, we broke that opening range break, and this was a buy entry right here. All right. So then we started moving higher, and you'll see a problem, all right, if you were playing just off the 20, then you didn't have a good entry spot, right? You were above the 20 already, and you fired through this opening range break. So this was your buy setup. If you sold into this run, now you're looking for your next trade. So say you sold into this, it looked like a little bit of a double top here. You're looking for your next trade. And because we're extended past the 20, you don't want to be too aggressive. And here's what I saw at this point. We let the 20 catch up. Again, this is the 2-minute chart. And this is a double bottom near the 20, right? So we were able to form a double bottom. I took this long here, and your stop is just under this 513.5. So you want to use this candle if you're taking it at this point. So you had a double bottom with this wick here at 1030. I should mention there's usually a 1030 reversal, if you didn't know that. So 1030 reversal, double bottom, and a nice move higher. So if you either took this and had exited, or you just missed this trade and you're looking for that next point to get in, this double bottom was a really nice place to get in on the Qs today. Let me pull up just one more time the daily chart, because one of the problems as we broke through that 511 area was we needed a new target. So I was looking for where the Qs might be able to go to, assuming again, a strong day because of that CPI data and the follow on from the good news, the positive news around tariffs with China. So I pulled up the daily chart to try to find a level that we might head back to. So when I pull up that chart, I'm looking back to the left to try to find where resistance is, right? Where that next resistance level is. And basically, it came back to this area around February 27th. And the high that day was 519.07. So that's the area that I thought, like, ideally, right? If the market just takes off, we can get back to around that 519 area. That's our next resistance area. So that's what I had in mind throughout the day. Let me go back. So, and that's another reason why I liked this double bottom setup, because I still thought we were going higher. I had a really good chance to go higher, even though we were up, a decent amount on the day. And this trade obviously worked out. So let's continue through the day. You had another nice buy setup here off the 20. We started weakening a little bit here. And then we started getting into this 517 area later in the day. I'm going to make this a little bit larger to show you the double top that was setting up. So we get to that 517 area, we pull back, have a decent pullback. And then pop higher, but we pop right into that 517 area. And here's something that I noted as we pulled into that 517 area for a second time. If you look at RSI divergence on TradingView, you'll see a couple of things happened here. First, we had a bearish divergence between the high here in RSI and the high here in RSI. It's slight. It's not a big divergence, right? But I was looking for something to confirm the double top. So we had to move higher in the Qs while we moved slightly lower in RSI, right? So we had RSI falling off slightly while the Qs actually moved higher. And then look at what happened. So we had a little bit of a negative divergence going on for a possible short, right? We're looking at shorting the double top. And then look at what set up. Here we had basically a sideways double top here. And look at the negative divergence that set up in RSI here, right? So we had a really much better negative divergence in RSI on what basically became a triple top, or you could say it's two double tops. So this turned into a nice short, right? And I ended up shorting the market here for a move lower. And if we go on through the day, you'll actually find that that top held, even though we pulled back. I'm just going to speed it up just a little bit. Even though we pulled higher, and now we're talking about 3 o'clock. Oh, let me stop here for a second, actually. This was a double bottom. It formed under the 20, so I wasn't thrilled with that part of it. But because the market was so strong and had been so strong today, and we really didn't pull back all that much, I like this double bottom. If you're looking at the relative strength, you also had a positive divergence slightly here. The market was actually like, we didn't quite get all the way down. So it's arguable whether it was a real divergence, but that was in place. We had RSI moving higher as we were pulling back. So I took that as a positive sign that this double bottom would hold. So we get this double bottom, which has a really nice buy entry here, just over this red candle. And you can put your stop just below. I put my stop just below this candle. And then a really nice move higher, back to that 517 level. This is around 320. And you'll see actually what happens. That level held, and now we're live. So the 517 level held yet again, right? So that became really good resistance at that level. And that set up another short trade here, which I didn't take because I'm making this video for you guys. So those were the different things that I saw today. The ORB trade was really good. The CPI numbers that had the market moving higher before the open. We broke through that Fibonacci level at 511, which again was super important to get back into that upper range that the market had been trading in. From that 511 area back up to 540-ish. We had a nice double top setup with negative divergence. And we had a nice double bottom setup, even though it took place underneath the 20. Again, this is the red is the falling 20. Even though this, again, double bottom took place under that, the market had been really strong and you had some support in this area from earlier in the day. So that was a nice reversal trade. Hope this was helpful. If it was, please let me know. Hit like and subscribe, and I'll make more videos of what I'm seeing during the day, how the technical setups are working, and what I'm seeing. Thanks for watching.